So welcome. This is our house hunting and hacking group. We like to unlock the power of real estate together. So we're very interactive with our guests and each other, and pass questions along back and forth to learn. We meet on the second and fourth Tuesdays at 7 p.m. Mountain Time, as many of us are kind of in the Colorado area, though we are helping people nationally. So this is us. I'm Genevieve Henderson, your loan advisor and mortgage expert at American Pacific Mortgage. John Nichols is our realtor and investor guru. And Amber Zamudio is our insurance specialist. She's independent, so she'll shop for you. And this is our topic tonight, which is most profitable, long, mid, or short-term rentals. And our presenter is John Nichols, and the moderator tonight is Amber Zamudio. And I'm going to stop sharing so that Amber can take over with helping out on the PowerPoint side.
All right. Well, thank you for coming, and I'm excited to talk about this. I have been a realtor for 5 years, but real estate investing since 2012. And my wife and I have been doing both long, mid, and short-term rentals in Colorado and Florida, starting in around 2012. My journey has been a teacher and a coach, and 11 years ago, we decided to make our primary residence in Lyons, Colorado, a long-term rental. And we bought our first home in Longmont, Colorado, about 10 miles away where we live now. And that's where we got our first experience with short-term rental. So I am going to speak to all three of these. And to answer this question right away, it really does depend on a lot of factors. And I will go into those and we'll go from there. Amber is going to run this for us. And then we do have this slideshow that we can share with you. Genevieve was nice enough to make most of this with a few suggestions on my part. And there's quite a few hyperlinks. And the first thing I'd like to click on, if you could, Amber, is this Investopedia. Just why do you invest in real estate in the first place? Hopefully that will be shared with the screen.
And Amber, I don't know if you shared the actual PowerPoint or if you just shared your screen, because when you click on those links, if you don't share your
Jen,
screen,
I'm sorry, you're breaking up. I can't hear you.
If you when I did to initially share, if you shared PowerPoint, it's only going to let us see PowerPoint. We won't let us see the links when you open them. So if you'll unshare and click screen rather than the PowerPoint, we'll be able to see the links when you.
So yeah, and so while she's doing that, the question that I wanted to start off with, and it's in the Investopedia link, is just why do you invest in real estate? So there are definitely pros and cons to that. And it sounds like those who are in attendance tonight have already done real estate, so they probably experienced some of that. But generally speaking, some of the reasons that are good, if you can just kind of scroll a little bit up, some things that are great about real estate is there are tax advantages to it. Any kind of expenses that you put in, anytime that you travel to find a rental property, those are all things that are tax deductible. And the other thing is the long-term appreciation and the ability to take that appreciation and through a 1031 exchange, if you just want to scroll up a little bit more, Amber, a 1031 exchange will allow you to take the gains that you've made and be able to transfer those to another property. So the cons of the real estate, just to kind of brief you on that, is, sometimes depending on how you manage your property, whether you pay a property manager or whether you do it yourself, is the fact that that can be kind of difficult. Sometimes you're dealing with tenants, and sometimes you're dealing with tax code changes, neighborhood decline. And then one thing to always keep in mind is, how much liquidity are you investing in a real estate property? I am starting to hear a little bit more about loans that will allow you to put in less than 20% in an investment property. I don't see a lot of that, but that is something to keep in mind. There's always that age-old debate, like, should I put less than 20% down and pay my private mortgage insurance, or be able to do the 20% down and then not have private mortgage insurance? But then by doing the 20% down, you're obviously, you're building equity right away, but that's money that's maybe being tied up so that you don't have other options. So something to keep in mind. I wanted to kind of go into, if you can scroll down to that second slide, I guess it's the third slide, Amber. How do you know if a property is a good investment opportunity? And if you could click on the cap rate calculator, and again, we're going to share this with everyone, so we encourage you to look at these links. The ROI calculator, that's a fancy way to just say, like, depending on how much money I put in, how much money do I get out, and what is the return on my investment? But I really like breaking things down into the cap rate. Okay, so if you can click on where it says the definition, Amber, let's just kind of look at what the cap rate definition is. It would be the first thing, just to the first hyperlink there under table of contents. And basically what we're trying to figure out, is there any way to make that a little bit bigger? Okay.
That might be a little too big,
Yeah,
sorry.
it's a little too big. So what I like about this one, and again,
Okay, now?
you click on that link, it says, to put it simply, cap rate is the rate of return on the real estate property. In other words, it describes what part of your initial investment will return every year. What part of your initial investment will return every year? That's the best way to think about it. So for example, imagine that you bought an apartment for $100,000 and the cap rate is 10%. It means that each year, 10% of the initial investment will return to you. As you can easily calculate, your net cash flow will be equal to 0 after 10 years, which means that you will actually start to make money on this investment from your 11th year onward. Now, one thing that cap rate does not calculate is finance costs. It's more just the raw investment. And I wanted to give an example. So Amber, if we could go to, we're gonna put in some numbers here. I'm gonna put in a number for a midterm rental that my wife and I recently bought in Florida. And this will kind of give you an idea of what the cap rate is. So we bought it for $250,000. Okay, and we're just going to say, for right now, let's just say that it was $2,400 in rent. So we didn't buy it at the beginning of the year, and we're still getting it fixed up a little bit. But we're just going to say that we've averaged $2,000 a month.
So 28, that's what you want?
Well, it would be $2,000 a month. It would be $2,400 or $24,000. Okay, and then operating expenses, even though you're not including financing costs, you do need to think about maintenance. So things like HOA fees, electricity, gas, utilities, things of that nature. Let's just go ahead and put operating expenses at 30%. Now, this is going to vary quite a bit. It's going to vary quite a bit because as we start talking about the difference between long, mid, and short-term rentals, for your long-term rentals, your number is on the operating expense is going to be lower because for the most part, you are renting it out at a lower rate. You're having your tenants pay utilities, and it's not furnished. So the expenses that you put into it is generally lower. However, the income that you get from that is usually lower as well. So let's just go ahead and put 10% vacancy rate as an example. Okay. And that tells me that my net income is $15,120. Now that gives me a cap rate of 6.48. My cap rate's a little higher than that. I was overestimating a few things, but if you can get a
I think he's frozen. Because you're moving, Amber. I know you're working.
Okay, I was just making sure because I'm getting really choppy from him.
Yeah, it's his connection. In the meanwhile, in case you're interested in that calculator that we're going through right now, I'm gonna put that in our chat. So you can copy and,
Sorry to interrupt. I was gonna say too, Omni Calculator has, I think, over 1,000 different types of calculators. And you can do all sorts of financing, you can do construction, you can do all. I haven't found anything in there that, or I haven't found anything lacking in there. So anyway,
I'm sorry, I got kicked out for a second and I'm back. So what were you saying, Jonathan?
well, I was saying the Omni Calculator that you guys just showed actually has about 1,000 different calculators for different scenarios.
Mm-hmm.
Just wanted to put it out there for anyone who didn't know that.
Yeah, fantastic. Yeah, there was definitely one of those that just wanted to pick like a general calculation. So generally speaking, if you can get a cap rate between 5 and 10%, obviously the higher the better. And so as I was saying before I kind of got booted off here, one of the ways that you are going to try to increase your cap rate and your return on investment is obviously trying to negotiate a lower price and as much income as you can. One thing that I try to do, and this has been a formula that's worked pretty well for me, is when I think about getting an investment property, I try not to get too caught up in the weeds. It's really easy to overanalyze and spreadsheet yourself to death. But at the end of the day, you want to be thinking about, how can you get a good rent estimate calculator? And when I calculate all of my costs, I want to calculate insurance, HOA fees, taxes, etc. And I like to, in my case, this is a little different than our cap rate. In my case, I like to include the financing cost because it is a cost for me. So some of the properties that I've been able to buy, I might get all in at $1,000 a month, and yet I'm getting $1,500 to $1,600 rent. So the more that you can be thinking that way, I think it's a lot simpler, and you don't get so caught up in the weeds. So I do think about return of investment a little simpler. We have quite a few properties and we've been cash flowing on them, but there's many different ways to do that. So I wanted to go over that. And then I think I already talked about, if we go down to that next screen that shows the money in the calculator, is there an easy way to calculate ROI? That again is where I think, yeah, the easiest way is to really think through, like, what is the price point? How low of an interest rate can I get if I'm
I'm
not?
sorry if you're directing me to do something, John. I'm having a hard time hearing you.
Oh, can you hear me at all?
I'm able to hear you from my side. So if you need to communicate to Amber to do anything, you might want to just do it in the chat.
Okay. All right. So is she just not hearing me at all?
I'm gonna get out of here, Jen.
Sorry?
I heard that. Jen, I'm gonna pop out of here real quick. Can you take over the share? Because I can't hear John.
So she's gonna unshare. I'll take over in navigating the PowerPoint.
Okay. So chat box.
Sorry, John, what were you chatting about?
Yeah, so we go down to the screen that says, what's the cash flow return on investment? And we already talked about that. The simplest way to do that, again, is really to think through, like, what is my all-in costs and what is my projected rent? And, everyone needs to feel comfortable with whatever that cash flow number is. In my case, I've always tried to use the metric of $400 to $500 a month. Okay. So that leads to the next thing. So what is the way to get the most ROI on a property? Should it be short-term rental, mid-term rental, or long-term rental? So that is a really good question. And I think it really depends quite a bit, but I will say that you are going to get more return on your investment if you can do a long-term rental. If you can do a mid-term rental, I feel like that's probably the best way to do it. I think that's a great niche. The reason I don't say short-term rental is because there's so many municipalities out there that are making it very difficult to do short-term rentals. However, midterm rentals is a very nice niche because you're usually doing it for 30 days or more. And because you're doing it for 30 days or more, it is a glorified month-to-month lease. And a lot of municipalities are not really scrutinizing that much. So I think a lot of people who were doing short-term rentals are now pivoting based on local municipality guidelines to more of a midterm rental. So let me clarify what I mean, just to make sure we're all on the same page. Your short-term rental is more things that you're doing a week at a time, maybe a few days at a time. And generally speaking, the shorter amount of time that you're renting it out, and then of course, depending on where it is, the more likely that you can get a higher rate per day. And conversely, the longer you're renting it out, the lower that rate can be. And I think it kind of goes down to when you're offering a 3-month, a 6-month, or a 12-month lease, you're basically doing more like volume pricing. Whereas with some of these shorter term leases, it's kind of assumed that, hey, you know, I'm coming in, I'm not staying very long. I realize I need to pay a little bit higher price for that. The other thing to keep in mind is with your short-term and your midterm rentals, you are furnishing it, you're providing the utilities, you're stocking the kitchen, you're doing everything as though they're going into a hotel room. So that being said, one thing to keep in mind about the short-term and the midterm rental is that you do have more expenses. But then again, kind of like what we did with the cap rate, you can, well, we didn't really talk about that in the cap rate, but in the earlier part of the presentation, we talked about the different tax advantages of real estate, and anything that you're doing to furnish that rental are things that you can write off on your taxes, which I think are really good compared to a long-term rental where you're not getting as much rental income because you're not paying the utilities, you're not furnishing it. And then the other thing to keep in mind is you are not getting near as many tax advantages because you're not putting as much stuff in there. So tips and tricks to get a greater ROI, in my opinion, would be if you can take a long-term rental just in this market right now and in this environment we're at where people are really scrutinizing the short-term rentals. If you can take a long-term rental that might be getting $1,900 a month and you can furnish it, and if your HOA or municipality allows it, which many of them will, and if you can turn it into something where you're renting out furnished more for 30 days or 60 days at a time, I think that's a great tip and trick in order to get better return on your investment. So to give you an example, my wife and I, the last couple of years, have been investing in the Tampa area, and we found a condo complex down there, and the HOA allows for leases of 30 days or more. When we first started that process, we had never done that. We had always done long-term rentals with some of our places in Colorado, or we had done kind of your day-to-day, week-to-week short-term rentals with some of the bedrooms we have at our home in Longmont. We had never tried the midterm before. So with those condos in Florida, we've purchased all three of them somewhere between about 250 and 300,000 each, depending on the year and depending on some of the amenities. And if I were to take those condos right now and rent them out where the tenant is paying the utilities and there's no furniture, I'd probably be getting about $1,800 a month. And that would be consistent. And that would be, you know, for pretty much a 12-month lease. One of the things that we've been doing to hack and get a higher rate is we've decided, let's go ahead and furnish those. They're in a nice area. They're highly sought after. Let's pay the utilities and let's try to get a better return on our investment. Because we're paying those utilities, because we've furnished everything, because we've done extra trips in order to do all that, we have been able, although it did cost us money, we've been able to write that off on our taxes, which has been great. And generally speaking, at the lowest point of the year, because Florida is seasonal, and you can pretty much transfer this to any state, we're probably getting about $2,400 a month during the worst part. So that would be like in the super hot part of the summer. And yet right now we are heading into the part of the rental season for these midterms where we're going to be expecting anywhere from 3,500 to 4,000 a month. So that's not going to be every month. But when we average it out, doing a furnished midterm rental, we are going to be getting somewhere in the $2,600 to $2,700 a month range compared to the $1,800 to $1,900 if we were to do long-term rentals. So in my opinion, the sweet spot right now and what a lot of investors are pivoting to is how can we make that happen? And it doesn't necessarily mean that you have to spend an unbelievable amount of money. That's another tip and trick here to get better ROI. A lot of people say, well, I don't want to convert my long-term rental into a midterm rental, for instance, because it's going to cost an arm and a leg to finish and to furnish. We didn't really find that to be true. One of the units that we bought was pretty much turnkey. It was from somebody from Canada, and it was right in the beginning stages of COVID, and they just couldn't stay there anymore, and they sold everything. And so it was great. So we had nothing to really spend on everything to make it a furnished rental. The second one was half finished. So my wife and her friend had to go down and cap it off, so to speak, make sure it was ready to go. And I'd be happy to share the link to what they look like now. And then the one that we bought this year, it was completely empty. So my son and my wife and I went down there over spring break, and you would be surprised. I mean, I would say for $4,000 to $5,000, we were able to furnish and decorate the whole thing. We just found a lot of things on Amazon, brand new, that we could have delivered to like stock the kitchen. And then we rented a truck, and we went around and went to Facebook Marketplace and Nextdoor and thrift stores, and we got really, really nice stuff, but did not have to break the bank. And yet, for the most part, our tenants are very happy. They think it looks great. And so without spending a lot of money, because that's kind of what we're thinking about when we're talking about return of investment, like how can I get the property for a good value? How can I find a cleaner for a good value? How can I hack the furnishing and not be able to, or not have to spend everything brand new, but still make things look really nice? We were able to get to the point where we now have a fully furnished midterm rental that is doing really well. So I can go into that a little bit more, but that is definitely some things that we have learned over the years. Now, Sherry, you had mentioned, I think you mentioned VRBO and Airbnb. Have you heard of Furnished Finders?
I have, and I haven't gotten very much in terms of response from them.
Well,
But I have a remote, very remote coastal property. So it's not, my vacation property is not where I live, which is in the North Bay, north of San Francisco. It's way up along the coast, Timber Cove, north of Bodega Bay. So it's remote.
Okay. Well, Furnished Finder they're out of Parker, Colorado, and they cut their teeth before the pandemic, really focusing on traveling nurses. But since the pandemic, and now that people are not returning to work, you have a whole bunch of remote workers that they have been tapping into. And one thing to keep in mind, if you're struggling like with Airbnb, because we use Airbnb and we use Furnished Finder, Airbnb has some positives and some negatives. The positive is that they are the trusted third party. They will do a lot of the marketing. You can do campaigns through them. They will do the financial transaction. They do a lot of the screening. However, at the end of the day, if you're trying to net $4,000 a month, your Airbnb renter is probably paying $5,000 a month. And when they look at what they have to pay, a lot of times they freak out, and then they don't rent your property. So one of the things that we've strategically done is put it on both platforms. And if somebody books with Airbnb, that's great because it's very little work for us. But sometimes, and my wife kind of runs both apps, but sometimes people will say, well, I kind of like your place, but it's just a little bit too high. And then that's when we subtly say, well, we've also got this on Furnished Finder. And that's been a way that we've been able to take the leads from Airbnb, another one of these hacks. And we're not advertising Furnished Finder on Airbnb per se. But we've been able to take the lead and keep the lead and then basically say, hey, why don't you follow me over here? And then they find our Furnish Finder link. And then the Furnish Finder link we like, because at the end of the day, they pay less and we actually net a little bit more, because there isn't the big third party in there that's taking all those fees. However, it does require a little bit more work. And that can be a little tricky, especially because we're talking about a remote property. So what I found is once we pivot over to Furnish Finder, we usually keep their interest, but then that's where my work comes in, where I'm going to need to draft a lease, and then I'm going to need to do some background checking, just like I would with our long-term rental. So one tip for doing that, especially if you can't be at the property to meet them, is, for instance, if they are coming to your property because they are moving and resettling in the area, as an example, I was able to find out who their realtor was, and I was able to talk to their realtor and find out a little bit more about them. Or in many cases, what you can do is you can say, hey, now that we're on Furnish Finder, you're going to save money, right? That's good. And we'd love to have you. We need to do a little background. So could you please share, it could be maybe not your former landlord, because a lot of these people are owners, but who have you done short-term rentals with before? And is there anyone that you can share that information with? So you're still verifying income and verifying rental history, but in some cases it's more vacation rental history. So that's another hack. So I really like Furnish Finder, Sherry, and I'd be happy to kind of talk to you a little bit more about how we use that, because it is a great way to not lose some of those interactions and those leads that you get on Airbnb.
Oh, that's great. Actually, I found that I had really good luck with Zillow, or I had more of a response by putting the property on Zillow for 30 months, 60 months, and 90 months as a furnished remote opportunity for people who could work from home. More of a response than on Furnish Finders, because I think on Furnish Finders for my area, it was more of the traveling nurses. The couple of people that I talked to were nurses and they needed to be near a hospital.
Gotcha. Okay. Well, that's great to know. I definitely use Zillow quite a bit for the long-term rentals, but I will definitely check into that. And I'm glad that we can learn from each other tonight. So
John.
your place is not near a hospital at all? Okay.
John, would something like Legal Shield, the lease services that are offered through that, be helpful for something like Furnish Finder where you're using multiple leases, or even through like Zillow?
Yes, absolutely. What I do like about Zillow is they do have a background checking feature. And then when we do Furnish Finder, or when I do long-term rentals, a lot of times I'm using this, I think it's a TransUnion. Yeah, TransUnion link that I send them. It costs $45 for them to just quickly fill in their information, and then I can do that. I don't do that when they're with Airbnb, but definitely when they're Furnish Finder, or Sherry, I don't know if you've had some success with Zillow and what you've used for background, but definitely worth the $45. And I usually put that on the tenant to do that, especially if they know how much they're saving by not going to Airbnb. And I think a lot of people do appreciate that. So Sherry, if you really like Zillow, then maybe what you should do is, if you get some Airbnb leads, and if you're starting to feel like, oh, it's a little too high, or I'm not sure, if there's a way to, tactfully pivot over and have that conversation with them, that might work to your favor to be able to keep some of those leads, because those leads are precious and there's a lot of people doing this. So you want to make sure, just like if you're in sales, you want to make sure you're not losing the hot leads.
Well, it's really interesting because my issues with Airbnb are on the support side, not so much the marketing side, the customer service side. And they've changed their platform, so communication between guest and host is really restricted until an actual reservation is made. So I just, in fact, had a guest want to book outside the platform and had to encode, sort of message me some information. So their Airbnb is, it's not easy to communicate with a prospective guest outside the platform until you've actually had a reservation. They just did that recently, but it's just interesting to me. Just side note.
Mm-hmm. Yeah, they are always changing the algorithm. So, Jonathan, this probably applies to you more than to Sherry, but I just wanted to share a little bit about what is going on in Colorado. And we just talk about different counties that I feel like have some sweet spots. And Jonathan, you might know more about what's going on in your area. I work mostly the Front Range, like Larimer, Weld, et cetera. But I think Weld County is a great place to find investment properties. Again, when we talk about ROI, a major factor in that is going to be the price. The reason that I invested in Weld County, and most of my long-term rentals are in Weld County in the Greeley, Colorado area, is because of the fact that back in around 2018 and 2019, I was not finding a lot of good cash flow properties kind of in the Denver area. And I went out to Weld and I started to look at some of these properties, and I saw that the price points were significantly lower, the taxes were significantly lower, and yet the rental income was pretty high. So that kind of goes back to my simple formula about evaluating rental properties and return on investment. At the end of the day, not only have I bought some, but I've steered a lot of investors that way because of the simple formula. Like, okay, if we calculate the cost to finance, the taxes, the insurance, and if it does have an HOA, what is that number going to be, at least starting off? And then there's a couple of different ways you can do it. You can use Rentometer, which is a great way to calculate rent, but there's actually a Zillow site that I'd be happy to share with you that's free. And it doesn't give me the exact rental income, but it gives me a range. And I think that's really important. And so Weld County has just been great. I recently found a couple of cash flow properties out there. You can still find a 2-bedroom, 2-bath, 3-bedroom, 2-bath condo in Weld County with a low HOA and low taxes for somewhere in the 200 to 250 range. And yet the long-term rental on those is going to be somewhere in the 17 to 1900 range. Also in Weld County, Genevieve and I helped a buyer to do a midterm rental, and he bought a condo for, I believe it was around $240,000, and it had an HOA similar to our ones in Florida that allowed 30-day minimum leases, and he bought it from a realtor who was using Furnished Finder and Airbnb to rent it out 30 days at a time. It did have a hospital nearby, and so that's what Mike, the investor, is doing right now, is he's renting that out furnished 30 days at a time. That's a condo that he should, depending on the season, he should average somewhere in the $2,500 to $2,600 a month range for the midterm rental, compared to if he was to do that on a long-term basis, he would be looking at more like $1,600 to $1,700 a month. So I really like Weld County. I like Larimer County, but not as good of a value. It's interesting because Larimer County, it's obviously west, so the closer you are to the mountains, the more expensive things are. But for those of you who are looking at the map right now, it's that county right next, just to the left of Weld County. They're going to be a little cheaper than Boulder County, which is just below that. But what I find really interesting about Larimer County is your price points are higher, your taxes are higher, but your rents are actually lower than Weld County. And that's why I think Weld County is a real sweet spot. If you look at that map and you look at Weld County and you look just to the right, you will see Logan County. And Genevieve and I just recently helped a buyer buy a fourplex out there for $425,000 with lower taxes in Logan County than actually in Weld County. And the city he bought that in is Sterling, Colorado, and they do have a junior college out there, Northeastern Junior College. And you're probably thinking, well, yeah, it's a little tricky. I mean, let me give you the full details. It was a $425,000 fourplex. The rents on that were $850 a month. So the rents were significantly lower out there, but you cannot find a fourplex anywhere in Weld County or Larimer County, or definitely not Boulder County or Jefferson County or Denver, anywhere for probably under, I would say 650, 700,000. So at the end of the day, it cash flowed well. Now that is a little bit of a drive to Sterling. He lives and works in Greeley, but every Monday he is in Sterling. And so he went ahead and bought it, and he is managing it himself. So I think Logan County is a great value. I think Weld County, Larimer County is great. Also, Adams County, which if you look at Boulder and then kind of go off to the right or just down below Morgan County, Adams County is kind of your North Denver, North Glen, Thornton, Westminster area. And there are definitely pockets of great cash flow properties there. Some of them have 30-day minimum leases, depending on if it's a condo or a home. And a lot of them, it would be more of your long-term rentals. But there are some 2-bedroom, 2-bath in the Thornton area right now on my realtor database that you could probably get for around 250,000. And the rents out there are really high. Another hack to consider if you're doing long-term rental would be considering Section 8. I have not done that yet, but I have known a lot of investors that have done it and have had some good success with that. At first, I had the stereotype that Section 8, they're going to destroy your place. And I've really been educated out of that because it takes a lot to get a Section 8 voucher. And my understanding and experience is people do not want to lose that. So the investors that I know that have used Section 8 have been very happy with that. So that's another hack to consider depending on where you are. But the closer you get to Denver, the higher the Section 8 payouts are. So even though a property might be a little higher in Adams County compared to Weld, at the same time, if you're doing that type of public rent assistance, you're going to be getting more rental income. So really kind of depends on where you're trying to invest and what you're trying to accomplish. Yes.
You mentioned about Section 8 and hospitals and schools and the opportunities that those offer. What about corporate leasing? Sherry wondered about the trend of corporate leasing companies.
Yes, that is something, Sherry, that I have been digging into, especially for our Florida condos. I can't say that I have found what we have found is we've found pockets of that. Like we found people that have found us on Furnish Finder and they were given a stipend because they moved down to the area. But I am still trying to connect with certain businesses that have a coordinator to do that. And I was actually going to ask you, Amber, from my understanding, there's a lot of insurance companies that are trying to relocate people. And in many cases, landlords might be able to get a hold of them. Like for instance, we've had visitors stay in our condo that recently got affected by a hurricane that was south of us in the Tampa area. And they were able to, I believe that the insurance company gave them money and then they used that stipend to find us on either Airbnb. So Sherry, I have not found the golden goose yet. We are still looking for that. Again, I'd love any ideas that you have because that's kind of the goal. I would love to find that one source or that 2 or 3 sources that I can go to them and say, here are our properties. Please connect us to people that need it.
Well, it's just an interesting thing. I thought of it as arbitrage. I don't know if I'm pronouncing it correctly, but I've been approached by people who want to lease my vacation rental and then turn around and, lease it out on Airbnb. And I didn't think that was such a great idea. But then my son was approached by a company in Southern California near Disneyland. They're a corporate leasing company and they're going to lease his house and furnish it and repair it, and then turn around and lease it to whomever. I'm still not clear on if it's the corporate, who the end user is, but it sounds kind of sketchy, but it may not be. I don't know.
Okay. So from my understanding, and I think a lot of it's semantics, but corporate rental is more like when you have a property, you are tapping into the coordinators of different corporations or insurance companies or hospitals or traveling nurses. They have your properties directly in their Rolodesk. And when they find people with need, they connect you and they give people the stipend and then they stay in your place. Like I said, we've had that happen, but more informally. So in order for us to get into a true corporate rental situation, I have to find the coordinators of those companies that have the renters that need to stay temporarily in my place. What you're referring to is Airbnb arbitrage. And a lot of young people are doing that where they don't own the property. They're going to you as the owner and they're saying, well, so for instance, they might say, we are guaranteeing you a certain rate. Like if you, on a long-term basis, if you were getting $2,000 a month, they're saying, we're going to give you $2,500 a month, no matter what, but we need permission to get in there and decorate it. And then our job is to try to do Airbnb and try to get over and above that 2,500. Anything they get over above is theirs, but you are going to guarantee, you're going to get a check from them no matter what. There are definitely pros and cons to that. It really depends on who those people are, if they're really going to take care of your place. And then at the end of the day, you are still responsible for your property.
And on that note, I would definitely talk to your insurance specialist about that, because there are a lot of times you would need a commercial policy for something like that, because it's now not being used as a personal residence, rather a corporate.
Great point. Great point. Yeah,
That would definitely be something to consider as well.
thank you for the tip. Good point.
Now, and my understanding about arbitrage is in order to sweeten the deal, they're saying, Sherry, we're going to give you $2,500 a month and we are going to take care of everything. Then, of course, it's up to you to even know what everything is and then to verify that it's all been done. But my understanding is they're supposed to take care of the utilities and all the extra work that it takes and all the funds it takes to run that business, because they are running a business out of your property. So that's
And that
Airbnb.
I don't have any problem with that. I'm a little concerned in that the liability part of it it just seems tricky to me. But this company might be more of a hybrid where they're offering it. It's the property's right near Disneyland, so they're offering it to traveling nurses, to corporate relocation. They're a corporate relocation company, but also possibly Airbnb. So it's kind of like a mishmash, and I just worry for my son's liability. But I'm really glad you brought up the insurance. I forgot about that. So thank you.
So the second to last slide is just how do you find a good renter? If you want to manage your own properties, and I've managed my own properties, if you want to do it, how do you find a good person? When we first moved out of our primary residence that became our first rental in 2012, I did call up property management. I have nothing against them, but I called them and they said, we're taking your first month's rent and 10% of every month. And I said, okay, well, if everything breaks down, then, the fee covers the new fridge or whatever. And they're like, no, our providers will fix it and we'll send you the bill. And I just thought to myself, this is going to kill my cash flow. So with the first house and beyond, so we have 9 properties now, I've just managed it myself. And I don't find it to be that difficult. There are different ways that you can rent it. You could do an advertisement on Craigslist, Zillow. I like Facebook Marketplace because a lot of cases when people respond, I begin interacting with them. And in many cases, I just come right on and say, do you mind if I connect with you on Facebook? We are building mutual trust. And if they have any reason to not do that, then that's a red flag to me. When I do connect to them, it does give me a little bit of a window into them. It doesn't mean that I necessarily say, oh, I don't like that photo, so you're not going to be my renter, but it's all part of doing my due diligence. So I'm interacting with them on Facebook. That leads to a phone call. That would be the second step, because we're talking right now about how do you find a great renter. It does take a lot of work on the front end, but if you find the right one, life becomes pretty easy. Kind of reminds me of the book Good to Great by Jim Collins, and he basically talks about running a great business. You spend a lot of time putting the people on the bus because you want the right people on the bus. So in my case, I do spend a lot of time doing that. So Facebook advertising. I get the message. I connect to them on Facebook. I interact on Facebook. It turns into a phone call. I answer all their questions. And usually instead of, if I've got 10 people, instead of 10 showing,
He's freezing up again.
Did we lose him or is that me again? Okay,
You want to let him know?
yeah.
Also, while we have this little break, I was gonna mention, based on like some of the things you were talking about, Amber, that were really intriguing Sherry. What Sherry doesn't know is 2 weeks ago, Amber was our presenter, and she did a phenomenal job in telling us about Legal Shield. She's a seller of Legal Shield, and she personally has Legal Shield for her investment properties herself. And so she was telling us about why you need Legal Shield, all the different ways, and we did a recording of that. So I'm going to put that link, that YouTube link of that recording, in the chat if you want to, pin that for future watching. It was very insightful for, I believe, landlords and investors.
did I get cut off there?
Yes.
Good.
Oh, I'm sorry.
Good
So
timing.
So where did do you remember where I left? Was I talking about finding a good renter?
Yes.
So to summarize, I like to advertise on Facebook Marketplace. I like to connect. I like to interact. I take as many people who are interested as possible, and then I set up a rental open house. I think that's a great way to do it, so you're not constantly showing the property. And then I am looking for little things like, are they punctual? And if they say they were going to make it and they can't, do they say, hey, I'm really sorry, can I reschedule? All those little things really kind of lead down to the right person. And then once I meet like 4 or 5 there, and if they show an interest, then I just say, hey, here are some basic things I need from you. Please send it to me in an email. And I always know when I found the right renter, because within a very short amount of time, without me prompting them, they are very detail oriented, and they will give me the name of their employer and the name of their landlord and things like that. And it's a great way for me to do my due diligence. So I do believe there are ways to find great renters without spending a lot on property management. And I know I got cut off. So if you would like to have a phone call and chat about that a little bit more, I can definitely go into details about that. And then finally, the best time of the year, this is the last slide, to shop for investment property. I like shopping around this time of year. Just in general, I like working with buyers this time of year. I think it's a great time because you're really looking for those properties that they're not pristine, but they have everything you need. They're in a safe neighborhood. They have the right amenities. I've never found a renter that, especially long-term renter, that is super concerned about, oh, it doesn't have the latest and greatest kitchen or bathroom fixtures. It's more like, does it have what I need? Both bedrooms and bathrooms. Is it nice? Is it clean? Is it safe? So that being said, there's a lot of properties out there. Number one, just seasonally this time of year, there are properties that are lingering on the market, and sellers are getting nervous, and they want to, they were hoping to be done for the holidays. They were hoping to be done for the cold weather, and maybe it was an agent that overpriced it and they had to keep lowering the price, or maybe they were under contract and then the buyer had cold feet, and maybe it was nothing to do with the house or the seller, but they just changed their mind and now it's back on the market. And that seller thought, man, I thought for the most part this was going to be sold. I thought I was going to get my money. So they got to put it back on the market. They got to think about pricing. They're not getting as many showings. The weather's getting cold, etc. So that being said, I like this time of the market. I like this time of year to do the shopping. A lot of realtors actually take time off. So there's not as many buyers out there because there's a lot of realtors that just don't work during the holidays. And yet I found some great deals on my own investment properties and have been able to find some great ones for my buyers this time of year. So I would say, generally speaking, around the holidays, while the weather is cold, that's a great time to go to open houses and look. Great time if you have a realtor to say, hey, I'd like to go look at this home, and ask your realtor, find me some investment properties in this area at this price point that have been on the market for a while, that have all the bones and everything that we're looking for, but just for whatever reason, it hasn't sold. So that being said, sorry things got cut off. They got a little choppy. Definitely some technical difficulties, but Sherry and Jonathan, it was great having you. And I learned as much from you guys as hopefully you learned some things from us. And we hope to see you again. I'm going to turn it over to, I believe, Genevieve to kind of wrap things up.
Thanks,
Yeah.
John.
Jonathan and Sherry, do you guys have any additional questions you'd like to pick John's brain about? Or if it's anything about mortgages or insurance, you know, that we can all, anything that you can ask, we're here to help.
And Jonathan, I got your message, so I will reach out to you for a phone call. Appreciate that. And if you guys want these links, I think Genevieve probably already mentioned that, but you can grab those from us. I really like the ROI calculator. And like you said, Jonathan, there's different versions of that. But yeah, it's awesome.
Yeah, thank you very much, guys. And I expect I'll see you again on the next House Hackers. Well, you said it's what, the second and fourth Tuesday of each month?
That's correct.
Okay, well, I'll probably see you again.
I'm gonna put
Excellent.
this back.
Thank you so much. Thank you. It was very good.
Thank you, guys.
12th. I'll be presenting, and the topic will be how to buy a home even when you aren't quite ready, mortgage ready. So there's a different type of hack, actually. If you'll RSVP on Meetup, we do have new Zoom links for each meeting that we have, so don't think that the same link works every time. Also, we have a Facebook group where you can reach us during the week with any kinds of questions, or find us, private message us through Facebook. But that is our Facebook group that we have, where we love to chat about real estate related topics, and even post listings. Sometimes John finds really good listings that he thinks would be good for hacking, so he posts them there. We also have that YouTube channel where you can rewatch or share today's recording, or go back, look in our library of some other topics that we've covered. And that is at House Hunting Hacking is our YouTube channel. So thank you so much. And if you guys don't have any other questions, then we are going to call it a night.
Thank you so much for joining us. It was lovely to meet you.
Thank you, guys. Have a good night.
Take care.
Bye-bye.
Bye-bye.